Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update, like we always do. I'm going to go over the dollar, yields, and precious metals and commodities ETFs that I follow. If you need help with anything, check out finding-value.com. That is where I go and dive into each one of these sectors looking for individual companies with very big rewards and buying them at very good opportunities where there's a lot less risk to the downside versus the big rewards. Shooting for 10 times, 20 times, 30 times my money on a lot of the companies. And if you want to know one of the companies, I shared it on YouTube in 2020. SM Energy, it's one of my best performers, and it's also still my largest position. So let's dive in here. Let's see what's going on in the stock market, and I'll give you my opinions. So we're going to start with the dollar. The dollar, obviously, very strong today. Yields were also up quite a bit. So we had this big kind of move here where we were trending lower and then we were trending on higher. And we've been going back and forth with the dollar. So lower, higher, etc. Now, here's one thing that you want to look at. Yields and the dollar are very much correlated. Let's throw TNX over it. The dollar, here, let me put it on underneath here. It makes it a little bit easier to see. The dollar is more or less just a function of what yields are. And then the sideways motion. And yields are more or less a function of crude oil. So crude oil moving up, yields moving up. Crude oil going down, dollar going down, rates going sideways, and then you get the hump, and the hump. So they're all roughly the same thing. Everything is financialized and leveraged to basically the price of crude oil. Crude oil was definitely up today. So is the dollar, and so is interest rates. If crude oil continues to go up, which I think it probably will, and it looks a lot more likely that that will be the case, I think we are going to see the dollar and yields move on up together. So dollar higher, 2-year yield is continuing on up, 10 years up quite a bit, breaking through the resistance level that was above us. That big resistance level that is going across there. Let me take this guy out of here. We do have support, resistance through this line, through here. Put it back through here. That is the next resistance kind of level that we are trying to break through. Now, just because I drew this line in there does not mean that it's necessarily resistance level. The resistance level is where all these buyers and sellers were trading in these general locations. So that's the resistance that we have to get through. TYX is also heading on higher, up about 2.16%. These are pretty big days. We've got a resistance line going through here, and we're starting to break through that. I think yields are going up. I think dollars going up. I think oil's going up. That's going to be the driver of it. I think inflation is going up with oil going up. So that's kind of what I'm seeing in the markets. We're probably going to see the yield curve most likely invert as well. Here's TYX, TNX, it's inverting still. It's going lower. When this goes lower, it means that the 10-year is going up more than the 30-year, and that generally goes lower. And we can stay inverted for a little while. Does that mean that precious metals are going to stay, be muted? Not necessarily. In the 1970s, we saw precious metals really start to rip it to the upside with interest rates going up and the yield curve being inverted. That could occur again. It looks like it could definitely occur. And we'll look at the precious metals charts and I'll give you my opinions there. Bond prices heading lower, substantially lower today. And look, we're back to support. But if we get rates going up, I think we're going to continue lower. I mean, if oil continues to go up, rates will go up and bond prices will go lower. The 2 and 10, we actually had a little bit of an uninversion, but it's a bull steepener. Bull steepener is when the 10-year goes up more than the 2-year, and it's going upward. So it's a wait, bear steepener. Did I say that right? Did I say bull steepener or bear steepener? It's bear steepener. Gold, it's holding on. It looks really good in my opinion. This looks fantastic. Weekly candlestick, it's just a bloody nose. It's a continuation move to the upside. The dailies, we don't have much selling pressure here. If we had selling pressure, it would have sold off, sold off, sold off. That is what a top looks like. We don't have that. We've got something that is squeezing, which means that we're most likely going to continue higher. That very well could be correlated to increasing interest rates on the long end of the curve, that people are unwilling to buy 10-year and 30-year bonds because of inflation expectations in the future. When you get that type of fear into the market, gold breaks its relationship potentially with yields going down, gold going up. Yields can go up and gold can go up too. And with where we're located, this looks fantastic for continued move to the upside for gold. Silver also looks like a total beast here. Small selling pressure day to day. It's a bloody nose, small little candlestick. Bullish engulfing, bullish engulfing. We've got some big bullish engulfings coming up. Lots of buying pressure. They're big extended green candlesticks. The green army is showing up, and we're right at resistance. To me, it looks like we're ready to try to break here, maybe even tomorrow, but soon is what I'll say, soon. And when we break, silver generally runs, and it runs fast. Last time it broke here, it broke here. We have another line there, it broke there. And look at every time it breaks, you get these gigantic slingshot moves. And that's really all in history. 1, 2, 3, 4, 5 times in history, perhaps. And the fractal, this fractal here looks the same as the fractal here. It's the same thing. You get this like lead in, you get the lead in, come on up. This pattern here is this pattern here. And then we've got the squeeze here, which is this squeeze there. It's the same type of fractal when looking at history. So I think we're going to get a big move here, which could engage the bigger pattern, the 50-year pattern. Not just this small cup and handle here, but the other bigger one that's the whole thing. The whole kit and caboodle. This could be like the mother lode of mother loads, written in all technical analysis books. Platinum. Platinum's up, no, platinum's down 1.3%, but it still looks good. Momentum's to the upside. You can also look at this like a little bit larger kind of squeeze here, but the way I view it is it looks similar to like this, and we're in an accumulation cylinder where we have 1, 2, 3, 4, 5, 6, 7 potentially, and then a big break to the upside. Palladium also looking pretty good. We were up today, and this has an inverted shoulder that we've broken to the upside. The neckline looks really good. Keep going. XAU to gold ratio, it's holding steady. We were down a little bit today. We've broken the downtrend line in the very short term, but we have not broken the bigger, longer downtrend line that I really want to break. If we break that, I'm going to be bullish times 1,000, because XAU to gold, the gold and silver mining companies have not been this cheap to gold in history, basically ever down here. This is the cheapest they've been. And the opportunity with what I think is coming in silver, like the 50-year chart break pattern, gold's already broken to the upside of a 13-year cup and handle. There's no reason these should be down here. So yeah, technology stocks are sucking all the money. Crypto might be sucking some money too. We're just waiting for that rotation to come back over here. CRB index is up. Oil's up today. So that looks fantastic. Huge move. Big move coming here, boys. Big, 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 big move. This is the fractal of last bull market overlaid and stretched to this size. Something like this could be coming over the next decade. That's what I'm investing for, this big move. I don't really care about the little market movements that occur in here. I want from here to here. That's my goal, to get as much of that return as possible. A lot of the companies, some of the companies will do 100x that I'm potentially in. They're already up 20, 30 times. Other ones that I'm buying now, hopefully they do 10, 20, 30x. That's my hope. CRB to S&P 500, another one. You can see the fractal overlaid on it. This is wave 1, 2, 3, 4, and then 5. This is the fractal of a ratio. I took this one here and overlaid the ratio. And it doesn't mean it will end there. We could get up here, which is possible on a blow off top. But we're still very early in this. Shorter term, we're making headway against the S&P 500. Could say that this is kind of a breakout there and drop perfect, but it's looking good. The CRB index to continue outperforming. GDX had a small down day today. Doesn't look that bad. Still looks good to go higher. We're breaking through a lot of these resistance areas. We still have a lot of overhead resistance, but when we look at the big picture view here, this is just a big flag pattern there. You can also look at it as the blue line there going across. It's a double bottom, a breakout, and then a retest is here. And you generally want to buy the retest. And I think that we are going to work our way on up very, very high. I mean, very high. And it is possible, and there's not enough data here where some of these are kind of squeezing into a corner and they're going to break through the whole thing and just do a gigantic launch. Definitely look tomorrow at Twitter. I'm going to go over a pattern that someone had created, and it looks really good. Very much the way that I view what I think is coming. GDXJ, you can see that we're squeezing into this corner here. This looks absolutely fantastic, guys. The juniors look, GDXJ looks fantastic. This is ready to go. I mean, it's good to go. It looks really good. SILJ is also breaking out of its squeeze here. It's at a very low level. And I do think that this is like a consolidation the entire way. And this is going to break out and go to some level that is like way above this. That's what I think is coming. We'll break out like this and then go up like here or something, or even higher. Something ridiculously big. And there's other patterns that look like that in history that are almost exactly the same as this, as a basing pattern. Crude oil up 1.77%, looks really good. I drew some trend lines in here of a channel. Let's see if we can break through it. I think we will. We've got low inventory levels. We're drawing down on inventory. We have a deficit. And I think we'll get maybe by the end of summer or something like that. We could be over $100 a barrel, maybe possible, or even higher. Maybe I'd say definitely 94, like low 90s to mid 90s, definitely. But we could even come all the way back up here. It's possible. ETF gas up 5.89%, looks good to go higher. So bullish engulfing, definitely higher. Natural gas also looking pretty good, up 5.19% today. We're at a very low level, 1.75, so $1.75 per a million BTU. But that looks really good. Let's see if we can keep going. Our boy XOP, yeah, you know me, right at resistance, guys, right at the neckline. I'm getting extremely excited for this break and the release of this energy that's pent up underneath this neckline here. We've been hitting our head, hitting our head, hitting our head. And then when we break through this, we're going to the motherland, boys. We're going to the motherland. I really am excited about this. And you guys know how I like the oil and gas space. Say that. OIH is looking fantastic, up 1.2%. This looks really, really good. We are coming from levels that are the same as the previous bull market lows. And we went from the previous bull market lows of 300 to 1500. 5x in OIH. I think that is coming. I like that we're in a channel. It's similar lead into this, and we're slightly creeping up, which means we have a lot of strength. And then when it breaks, Whenever we start to break through some of these areas in here, I think that we are going to run, Forest, run. There's still, a lot of resistance through these areas here, though. But we're going to run it. We're going to see what we can do here, and there is some overhead resistance there. Sprott Physical Uranium Trust, we were up 1% today, roughly. We're still underneath some resistance. We'll see if we can pop back in this channel. Obviously, we've had a little bit more downside momentum recently, and the sentiment has definitely not been as bullish as it has been, at these particular tops here. But I would remain bullish. There's nothing really to be bearish about. This is a long-term play, and it will continue higher with time. URA down a little bit. Again, we'll see if this is a reversal candlestick and if it can actually get its butt moving. But right now, the momentum is still to the downside at this time. It's trying to reverse it, and we'll see if this thing sticks. There's that reversal towards the end of the day to create that wick at the bottom of the candlestick there. Uranium down a little bit, but again, guys, I can't be bullish until we work this momentum off. Basically, it's a flag pattern. We've got some strong selling pressure here, which is also a bearish engulfing. And here, there could still be some selling pressure in this thing. So I'm just going to wait. We do have a lot of support where we're at. There's a ton of support in this area here that we used it for this. There's still some selling pressure that's lingering in this. URNJ is the same thing, bunch of support there, and we are coming into that support region. TAN, it doesn't like the increasing interest rates, heading a little bit lower. We've got copper. Copper looks fantastic, guys. This is just a bloody nose. It's a continuation pattern upward. This thing is ready to go. It's gonna move on up, in my opinion, and grind on higher. COPX didn't even care that copper was down a little bit. It was up today, 0.42% is what I see. And I think copper miners are really they're gonna get a lift off here. Looking good. If copper moves on up, the copper miners should move with it. Let me see here. Yeah. Lithium down a little bit. This is also an interest rate sensitive guy. It seems like all the renewables are. So we were down a little bit for lithium, LIT, and got kind of a deal going on here. We're underneath a bunch of resistance. We come up, hit our head, and we'll see if we can break to the upside with some time. REMX down a little bit as well. This still could go lower. It's possible. That is a possibility. But it does look like it's trying to put in a bottom. The only thing that gets me a little bit worried is if interest rates continue higher, how does that impact lithium and REMX? I mean, that's really my only concern. S&P 500 down a little bit today. We do have a wick at the bottom. It's hanging in there at the current time. It's hanging in there. And then the NASDAQ also hanging in there as well. But we're starting to lose some of that momentum. You can see that we're kind of angled upward, making good gains. You can see that we're now going sideways. That momentum is slowing down, and we could get a turn eventually. Not stating it will be immediate, but eventually it could turn. We need to see if this is just a pause, and if we get some big buying pressure coming in, I'll change my mind immediately. KRE down 2.6%. It was looking really good here. And a little bit more selling pressure, and that might be related to interest rates again. The banks are very interest rate sensitive, and also how the yield curve's inverted is they make their money when it's not inverted this much, and also interest rates going up impacts what they have on their balance sheets in a negative way, which is all the bonds that they own. Emerging markets also doesn't like the increasing rates in dollar. We're a little bit lower, and that does look like we could go a little bit lower in the short term. We've got XHB also a little bit lower today. None of these sectors that I'm going over right here like higher dollar, higher yields. That's an oil game, oil and energy service game. MU also doesn't like it. So we're down a little bit today, down 0.7%. It is a bearish engulfing, but sometimes, we get a wick at a support zone. We'll see. I'll just say we'll see. We've got bullish engulfing here, bearish engulfing here. The buyers and sellers are duking it out, and it really just deals with interest rates. Interest rates going up, it doesn't like it. Interest rates going down, it loves it. Iron ore continuing to head lower. Momentum's to the downside here, definitely to the downside. We've got nickel working its way sideways. That still looks good to go higher. Everything's good. Aluminum down a little bit, but we've broken out of this pattern and we could just do a retest. But I think we'll grind our way on up. Baltic Dry Index up 2.4%. Still looks good to go higher. We've been working our way on up. We've got Newcastle coal futures. I do think it's bottoming here, and I think that looks really good for a potential entry point in coal. So we're seeing a lot more selling pressure in Bitcoin, and this could be a potential top. I've been saying that a couple times now. Bearish engulfing showing up here, bearish engulfing showing up today. And then what you're going to see is the momentum will start to turn. And we haven't seen that yet. The momentum is still carrying it forward. But this could slow and turn eventually here. Ethereum also getting a big bearish engulfing today, which also gives you further evidence or confluence, but there's still a lot of momentum behind this. So it might get volatile and work its way around, moving sideways for a little bit. That's what I'm seeing there. SMCI also seeing more selling pressure. You can see the big red candlesticks. I call that the red army starting to show up. It will also potentially work its way into a rising wedge or something like that, which will eventually work its way on down. What it means is it's tired. This could also be, if you know a little bit of Elliott wave, and you get this kind of move up. This is wave 3. You get these waves that you get. Wave 1, kind of a consolidation. Wave 2, consolidation sideways. Or I should say wave 3, and then wave 5 is this. So 1, 3, and 5, your pullbacks are these potentially, and we might be peaking out here in super microcomputer SMCI. We were down today. We're getting some bearish candlesticks, but again, we're early, and I'm just speculating on this. NVIDIA also getting some selling pressure today. This is a bearish engulfing here. More than likely, it was probably on high volume. There's the volume of that day. So it's on high volume. I would not be in this stock. I would be exiting the stock myself, not advice. And I'm looking at this to see if we get some downside pressure, but the momentum is still to the upside, so it's going to take some time. But that's what we got for today, guys. Thumb up for the content, subscribe to the channel, subscribe to the website if you'd like. We still have the coupon code LEAP. That's still going on. 50% off the first month for the monthly membership to try it out. Then it goes to regular pricing after that first month, or you can get a bigger discount on the yearly membership. And if you're a current monthly member, you can always go to the yearly membership if you'd like to save some money. All right, guys, that's what I've got for today. We'll catch you next time. This is Finding Value.